cabinet has weighed in on the manipulation of the rand. It says it's a move by some in the private sector to destabilize government. Minister in the Presidency Khumbudzo Ntshavheni says the scandal shows that banks have no interest in developing the republic. Magale Mohlala is the head of cartels at the Competition Commission, and we were meant to speak to him, but unfortunately we have been trying to get hold of him, and the phone is not going through at the time of this interview. And so we speak now to Economist Lebohang Pheko, who has honored our invitation. Thank you very much, ma'am, for your time this afternoon. So it would be almost over 6 years in the making, this investigation, rather. Maybe let's start from the beginning. When we speak about manipulation of the rand or the currency, what are we talking about?
Basically, it was an attempt, or it is an attempt, to ensure that the currency is manipulated to the extent that it is either devalued or overvalued artificially. This was done, and this is done in collusion. It's across borders because, of course, the banking system is international. So in this case, we're not only talking about South African banks, but we're also referring to various banks from different parts of the world, including the United States, including New Zealand, and some banks in Europe and in Asia. The way that this was done was basically by ensuring that different banks were able to fix rates and manipulate rates, especially the dollar to the rand exchange at particular times, so that, for example, if you're in a competitive environment, you'll find that if you go to one institution, the value of the rand or the value of the dollar of the pound is going to be slightly different. There'll always be a 0.1 or 0.2% differential. But in this case, it meant that particular institutions ensured that there was only one rate, meaning that the consumers were being deprived of the opportunity to make the correct assessment of where they would want to put their business. And not only consumers, also producers, small-scale producers, for example, who may have wanted to import or export goods, products, services, would have had to do so at that set rate, meaning that they may have lost the potential for revenue because the exchange rate was set at a particular amount.
I'd like for us to speak on the devaluing of the rand and its implications. We'll get into the overvalue in a few moments, but we were having rather a healthy conversation in the newsroom about what this means, right, for Joe Soap. So if you have, for instance, a bond and the decision that the Reserve Bank would have made, is there a correlation between devaluing the rand and the rand not being where it needs to be, and the decisions the likes of the Reserve Bank would have made that then impacts you if you have a small loan, for instance, more so when we speak about South Africans who are already squeezed? What impact did this have on Joe Soap?
Oh, it was huge. And I think this is exactly what people are still trying to assess. And this goes back, remember, Viduzile, this goes back about 15, 18 years. So this began in 2007 and until at least 2013. And in fact, this isn't the first time we've had this conversation, because prior to that, there was a commission that looked into the evaluation of the rand and the false devaluation of the rand that was led by Advocate Christine Kunda. And I think viewers would be well advised to have a look at some of those findings, because she was of a particular view that there had been some manipulation. About what this means for Joe Ndlovu on the street, as you say, it basically means that if your bond is valued at about 100,000 rands, for example, and you're paying it back at the value of about 5,000 rands per month, for example, it means that if the rand has then been devalued, the cost to your pocket it means that you'll then have to pay back at about 5,500, or for the differentiation between the manipulated rate rather than the real rate. It also means then that when currencies are devalued, there's also the potential for interest rates to go up, because then it means that there fewer rands go floating in the economy. And so producers need to find ways to reestablish and to recover those costs. The stronger the rand, the better for the local economy, because it means that there is more money floating in the economy. There's also a greater economic stimulus. But if the rand is devalued, even for importers and exporters, it also means then that they pass the cost on to consumers. So Joan Ndlovu and Thembi Sibeko, random, for example, will then find themselves with more, they might even find themselves with more notes in their pockets, which actually buy them less and mean that they have less value. So yes, things like bond purchases, car purchases, the cost of agriculture, because that's also an import and export, and also a seasonally adjusted, rate for prices anyway for particular food items. Those could also be impacted. Now, if we're talking a longitudinal level, a longitudinal process of 6, 7, 8 years of this going on, one can only imagine how much different the economy might have been, and the distortions, the pricing distortions and the cost of those price distortions to Joan Ndlovu and Thembi Sibeko.
Ma'am, how then should we understand the political speak that, more so maybe if you listen to the electricity minister on Sunday speaking about the involvement of the private sector, quote unquote, and the liquidity, quote unquote, of the private sector, and how the private sector should also come on board and create jobs for Joan Ndlovu, right, or for Thembi. And then you have things like this happening and the cabinet coming out. If you read between the lines, it says it must be dealt with, but by whom, right? So who is the victim here, and who can do something about it here?
Yeah, I mean, exactly. I mean, and also we're hearing that it's a part of a destabilization effort and so forth. And I'm not sure really whether that's really the way to go. There should be consequences indeed, but it also speaks to the fact that our own internal mechanisms for picking up regulatory irregularities are quite weak. And I think the only mechanism that we have had over the years is the Competition Commission, which is quite stretched. And for many years we've been saying, a few of us have been saying that there's no way that we can expect one commission to be able to deal with the sorts of irregularities that have emerged not only in the banking sector but across sectors. So you remember there was a time when some of the major supermarkets were also accused of playing some silly games in terms of the costs of milk, bread, and those bread wars that emerged. So this is not the only sector. So the private sector is a huge place. Within the private sector, there are different subsectors as well: agriculture, the retail sector, and within the retail sector, particular food. So I do think that the state needs to rethink the ways, the responsibility that has been placed upon the Competition Commission, and perhaps think about different sectoral avenues for finding redress. Also bear in mind that the Competition Commission have a huge backlog of issues. So this is only coming to light now. But bear in mind that it has been in the in the private domain. It has been under litigation and under investigation and scrutiny for many, many months and even years. I mean, this goes back to 2007. It is not a new matter. So the mechanisms for this have to be dealt with much more appropriately. I would go for the kind of approach where you have a banking commission which is independent, which is, a panel of eminent people and experts and so forth. Then you have a retail commission, you have different food commissions and so forth, to ensure that these sorts of issues can be picked up in good time, and also to avoid them becoming really party political fodder, as it were, which right now is not really helpful. Maybe there is a conspiracy theory, maybe there is not, but the people who are suffering right now are the South African public, Joan Ndlovu.
You also spoke about the overvaluing of the rand. What is that, and who does that benefit?
Oh, the overvaluing of the rand means that then, if the valuation of the rand, if it's overvalued, it means that when you're receiving imports or you're receiving currency in this country, you get far more for your dollar, right? So if if you decide that you're going to undervalue it, it's maybe 2 to 1 or 2 to 20, for example. But if you're overvaluing it and you're saying that no, it's actually worth 1.5 to 20, it means that when you send, when you send and you export, then you get far more for your rand. And so that actually is something that benefits people who have overseas establishments who have overseas interests, who are dealing offshore, and also who are also dealing speculatively on international markets, because that means that if you're willing to go into those sorts of high-risk speculative deals and high-risk speculative endeavors, you can win and you can get a huge amount of money in a much shorter space of time. So it also means then that it's turning the currency valuation into a lottery of some kind, because it implies then that rather than having state control and state sovereignty over the value of currency, it is then left to the vagaries of the market, and a market which obviously has its own interest in having these fluctuating valuations and devaluations, which are not grounded in market performance and market activity, but really are grounded in personal interest. And that, by all means, is completely egregious and unacceptable.
I am being pressed for time, so as succinctly as possible, if possible, because you also have the notion that we are a developing nation, we are a growing nation. How much does this, I'm not sure whether help or hurt is the question, but how much does it influence this narrative that we're not there yet, but we're coming there, given that it's both local and international banks that have colluded here, that you find a country like South Africa being kept at, or many on the continent being kept as still coming up, still developing countries?
I think that's actually such a strange and relative discourse to Duzile, because I think that, money is money. Markets don't care about whether or not a country is developing or developed. I think those are very arbitrary, problematic constructions. I also think that, the fact that we have some of the fastest growing economies in the world still on this continent, especially across the East Africa belt, illustrates that, the notion of developing versus the notion of growth are not always symbiotic. I mean, a country can be very viable even though it's not viewed as being a developing country. People are doing business in places like DRC, doing business in Gabon, which is very mineral rich, but, in terms of, their electoral infrastructure and their government infrastructure are not so stable. So those are very arbitrary labels, Duduzile. Money goes where money goes.
Money goes where money goes. Lebohang Pheko is an economist. Thank you very much for your contribution.